Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is howtotrade.com. Today, we're going to be talking about the ORB strategy, the opening range breakout strategy. A lot of you have watched the ORB. A lot of you like the ORB. It's an interesting strategy, and it's one that's really appealing, very appealing to many intraday traders because it's a breakout strategy, so you get to put on those big risk versus rewards, and you can actually get to look at maybe taking big profits on a successful breakout. For me, I stick with a relatively conservative risk reward. But this strategy is not bad. This goes back to the pit days. We're talking pit trading. We're talking open outcry where they would sit there. The pit traders would show up in the morning and they would watch and they would wait and they would wait for the market to set up and then they would make their play. And a lot of folks made a lot of money doing it. Absolutely full disclosure. I was taught by pit guys. That's who I was taught by. I was taught by pit traders that had made millions of dollars in the pit. My uncle Gary Vernier, he was actually an upstairs trader, so he would relay his orders down to the pit, and the guys in the pit would make the orders. But one of our partners, a gentleman by the name of Mike, he was a bona fide millionaire pit trader, and he told me stories. He said, "Hey, listen, 100,000. I would cash in with 100,000 in January, and I would cash out in December with well over $1 million." And a lot of those strategies were based on the opening range. A lot of them are breakout. A lot of them are range trading. This is an interesting strategy. I actually think that this one's one of my favorites that we've put out there. We've put a lot of strategies out there just to sort of show you guys, give you some ideas and sort of show you the way, really how to engage the market from a position of strength, meaning with a nice structure and with discipline and a strategy that you can stick to that may, in fact, treat you very well over the long haul. We put a lot of strategies out there. This is one that I think really can work for you. So this is the opening range breakout strategy at the end. I'm more than happy to answer any questions. And also, I'm going to go ahead and do a little bit of market stuff. But for now, right now, it's a relatively slow day on the markets. We're rotating sideways. We've only got a few trends to really talk about. But we do have a lot of opening range breakout trades to talk about. So we're going to sort of unpack the idea. I want to get right out to price action, though. And this right here was an interesting trade. This is your US 500 CFD. Tuku, good to see you. Tuku, welcome. Team Arena. Thank God it's Friday. Yeah, we're all sort of getting ready to roll onto the weekend. I know I am. It's been an interesting week. Today was a very good trading day for me personally. I had a couple numbers come in that were absolutely fantastic. So I felt like this week was it was a challenge. It was a challenge. The inauguration, the market closure on Monday, it just seemed like it was Chop City and really difficult to get a direction on these markets. Next week's going to be better. Fed week. We'll talk about that at the end of the stream. In any case, this is the opening range breakout strategy. This is a 15-minute chart. US 500. You can see we've got our opening 15, opening 30 minutes, and then you got a nice breakout right there. You got a nice break. There was your sell right there on that negative, and my entry point's just a little bit off there. I actually got to this one a little bit later on the day, right in here, but you can see right there. There would have been your entry, and the idea was this market's going to break and run to your overnight low. And that's a key level. So the process to trade this is very simple. We're going to run through it. We've also got a few trades set up that I want to go over and outline. This was a good looking one. We have a qualification rule that kept us out of trouble here on this US 30-minute chart. We've also got the Great Britain Pound USD. we're going to make a video about, I've got several requests on making a video about how to apply the opening range breakout to the Forex trading, to the Forex markets. And I think it's a worthwhile thing. It may be something that we do here. It's about sort of fitting it in and getting some time. But this is an interesting one. I'm going to go ahead and show you exactly how you could have executed this trade. And then also U.S. oil, I'm going to give you a pro tip on which opening range and which time frames to be looking at for your U.S. oil market. So there's a lot going on here with this strategy. I like it. And then towards the end of the stream, if you have any markets that you'd like to look at, I'm more than happy to pull up my Fibonacci's and give you my take on exactly what could happen early next week. We also put a trade idea out earlier. It was for the Euro USD. It's going to be our trade of the week over there on Forex Signals TV, one of our YouTube channels. So check that out when it comes out. I'll probably just put a link here in the trading room, or just drop maybe some things out on X with a formal write-up. We're not going to go over it today, though. It's just basically it's a Euro USD sell, but we are closing in on that entry point, and I think that we're going to get a shot at it before the Fed. And that could be a very good one. So, all right, everybody. Good to see everybody back. Bobby Bob, always a pleasure. Team Arena, yep. All right, here we go. Remember, if in fact you want to trade any of these strategies, be sure to head on over to Switch Markets. They have everything that you need right in here. They've got all sorts of CFD products, Forex pairs, all your favorite Forex pairs. You've got crypto, the US 30. We're going to look at that. The FTSE 100. We could certainly look at anything we want. We just have to know exactly when to do it and take a look at the leverage. You can't beat that leverage. Tight spreads, all sorts of bonuses. So go ahead, check out Switch if you're interested in trading something like this US 500, which in fact is your S&P 500. So definitely check that out if you get a chance. Today we dropped a new YouTube video. So if you're interested in knowing anything about AI, to code the 920 EMA crossover, get on in there. Brian Barbie, good to see you, Brian. If you want to check that out, you can go see Digital Shane. That's an AI rendering of me. I think it's kind of funny because the accuracy of these things, it's not quite, but the accuracy of this AI and the way that it's developing, it's going to be undeniable in the markets. It's going to be undeniable, and there's no question about it. So don't be stubborn on this one. I don't tell people what to do. I don't like giving advice, really. I can just only tell you from my own experience and my own beats. The proper mindset, AI, don't run from it. Learn how to use it and lean into it, because it is here and it's here to stay. And how fast this type of stuff is going to evolve, it's going to become a big part of our world relatively quickly. So embrace AI. This shows you how to code the 920 EMA crossover strategy. Just a few minutes, about a 10-minute video. Shows you how to use ChatGPT to code PineScript. This one's for TradingView. If we get enough demand and enough people are interested in this stuff, then we'll maybe make one for MT5, and I'll show you how to code the same strategy or maybe some custom indicators on MT5 that you can use. But ChatGPT and the AI constructs out there, they're in their infancy. And if I could give anybody one pro tip, don't ignore technology. I've done it in the past. I hated smartphones. I hated them. And I didn't actually get a smartphone until I absolutely had to. I had an old clamshell. I had an old Razor that I would just use to talk on, and I ignored the tech. It caught up with me. So now I need it for work. I need it for everything. You guys probably trade. And a lot of you are watching on your smartphones. So adopt the technology. Remember, it's not a savior, but it's not going anywhere either. Let me see Juan. Good to see you, Juan. Yeah, Skynet. Brian Barbie, it's 100% Skynet. So we might as well make a few bucks before Skynet gets us all, right? In any case, this is the video that a lot of you have seen and asked about, the opening range breakout. This one dropped last Friday, and that's what we're going to go over today, is just a basic strategy workshop. So relatively straightforward. When we trade a breakout strategy, the idea is that the market has to move. And in order for the market to move, you need two things. You need participation and you need public interest. Now, what that means is everybody's got to be looking at the market, and you've got to get enough orders hitting the market to actually move it. Now, a lot of us trade Forex pairs. I trade FX futures, and I will tell you that many times it's like watching paint dry. In fact, trading gold this week was like watching paint dry. So we've got to understand exactly when the market is most consistently moves. Now, typically that's one of two times. It's right around the open or the close, all right? So we're going to focus on the open. The opening range breakout strategy, or the ORB, is designed to target the market, a potential move, after that opening range gets set up, and then we're playing a breakout. Now, here's some times, if you're a global trader, if you're a Forex trader, you're going to need to know these, and I'm going to do a Forex example for you here in just a few minutes. But typically, we're going to focus right around the New York Open. We're not going to focus on the New York close here, even though I do know some traders that use what's called a late day pivot point. So they evaluate everything that's happened going into power hour, and then they make their trading decisions accordingly. There's nothing wrong with that. That's for a different video and a different workshop. We're focusing on the opens. Today, we're going to focus on the U.S. New York Open, which is right around 9:30 a.m. Eastern, 7:30 my time. And we're going to take a look at that and for our equities. And then I'm going to tell you exactly when to start looking at things for your commodity products, specifically crude oil and potentially gold. And it really is just based on all about volume, when volume comes into the market. So good on Florida. Cold in Florida. Yeah, it's pretty cold here. It's about 24 Fahrenheit, Juan. But I saw on the news where you guys were getting hit with some pretty good cold snaps. So stay warm. Get a fire going if you can. I'd go out on the beach, build a big fire. Why not? Stay warm. But these are the sort of the periods that you want to be focusing on. These are the opens. We're going to do an example with the London Open here in just a few minutes. So that's what we're looking at there. Today we're going to talk about, there's many different ways to look at an orb. There's a lot of different orb settings, all right? We're going to do the most basic one, and the one that I like, 2-candle orb setup. I love easy. I'm not a rocket scientist, believe me. That's why I'm stoked about the AI. It can actually help me do things. They can help me program computers. I can't program. I don't know anything about Python or C++ or any of it. I don't know. I mean, your guess is as good as mine. I sit down to code something and I go, well, I'm not doing that. I'm either going to have to hire somebody to do it or figure it out. Now AI can help us. Well, AI doesn't need to help us do the 2-candle orb. Doesn't need to. We can just use our eyes to see and identify it. And really the big thing to your success is going to be choosing great time frames and also really applying these to markets that have the potential to break. And I'm going to show you how to do that right now. In any case, the first 2 candles after the open. Now remember, this can be on any time frame. Just be forewarned that if you get down to 1-minute time frames and 5-minute time frames, your success level will go down. You will not get as many winners. You won't. But it's not to say that you can't be profitable. You just have to balance your risk to reward. That's all there is to it. You have to make sure that you're taking at least what you're risking. And with a breakout strategy, most people like to trade 1-2s, 1-3s, 1-4s. I'm just going to show you some 1-1s because I like to win. That's my personality. I want to walk away from as many trading sessions as I can with money in the bank. I shoot for 8 or 9 out of 10. I really do. I don't like losing days. They ruin my evenings and they ruin my weekends. However, that does keep you from making the really large money that everybody wants. So you can assign different risk versus rewards. I'm going to show you how to do that. But something like this is easy. Any time frame on any market. Now, you got to know when to trade them, and you need to know the best time frames. And I'm going to tell you those here in just a second. Playing a breakout to a key level. This is the other important thing that you have to understand about this strategy is you've got to be able to outline your key levels. You've got to understand what a key level is and what's important. We're going to base this strategy that I'm going to show you on the easiest key numbers there are. Overnight highs, overnight lows. Trading U.S. equities, you better know your overnight highs and lows. And then we're going to go previous day's high and previous day's low. Now, there's a million different technicals I could throw out there to be key levels, but we're going to keep it real simple for right this minute. Now, this strategy is ideal for equities, commodities, and maybe applied to the Forex pairs. Commodities are a little bit touchy, though. You have to know exactly when to trade those because your opening range is everything. You've got to know when to begin building your opening range, and if you don't know how to do that, you're going to run into trouble. I'm going to show you right now. This is an example of what we're looking at. This was a US 30 overnight or orb. This was an opening range, 30-minute chart right after the US Open. So this box right here represents the first hour of trade. We've got our key levels up there. We've got yesterday's high. You'll notice we've already traded above that. So not necessarily the biggest deal in the world, yesterday's high, but the overnight high. Now that may be a potential profit target, and it also may be a potential area where we could be looking to shoot for on a long trade. So, you know, is it the end? Is it worth it? Well, we're going to go ahead and break down the trade and show you exactly what I mean. So this is a strategy that we will be, if you have ever seen one of our 10-minute trading blitzes, be sure to tune into those. Those are over on Forex Signals TV and in the How to Trade trading room. You're going to want to check one of those out. I'm going to be doing the orb here relatively soon, right after the U.S. Open one of these days. So that is the basic schematics. Let's walk through exactly how to do this. This was a trade that I had set up looking beautiful that I wanted to get done here. I wanted this one to go live. All right, and it didn't go live for our live stream, so it's kind of not a very good example now. But what I did was a very good, solid time frame, 30-minute chart. I want the first two 30-minute price bars after the U.S. Open. So I want the 9:30 a.m. Eastern Time opening bell, ding, ding. I want 9:30 to 10, and I want 10 to 10:30. That first hour, I'm going to evaluate where the market is, what has happened, and how I can get in on the action. Now, you can see, very simple. Everybody in here can draw a box. You just go, you draw a circle, draw a box, whatever. There's your opening two bars right there. Now, the question becomes, do I want to go long or short here? Well, I can go either way. The idea is that we're going to move. In this instance, I had my top side targets. I was looking at yesterday's high, which we've already traded above, and then our overnight high right there. I was looking at the overnight high up there at about 44,579, somewhere up in there, maybe a run at 45 to be my breakout trade. So in order to get in on that trade, I have to wait for a bar close. In this case, it's a buy. I'm going to buy above my range on a complete bar close. All right? You follow me so far? So if we got a close up here, that's where I'm going to go long at. Now, I'll break this down for you on that US 500 trade that we have going. That would be my trade. What would my profit target be? One of my key levels. Now, yesterday's high, I wouldn't view that as being that big of a deal just because we are, we've already traded it, but I definitely would be looking at our overnight high, which is how high this market's really gone in the last 48 hours. So my 30-minute time frame didn't work. We took a check above our range. That was the breakout. We went right to yesterday's high, but look where our close was. We closed down inside of that range. It's a no play. It's not a buy. It's not a sell. It's nothing. Okay. What if I would have been on a 15-minute time frame? In the video, we recommend a few different time frames. Okay? 30 minutes, I think, is a pretty good place to start if you're trading U.S. equities, especially right after the U.S. Open. That is a true day trader breakout approach. It really is. Right there, there's going to be your 7:30 to 7:45. There's going to be your 7:45 to 8 a.m. So that's my time. So right there, that's going to be your range. Where's our range at? There's the top of our range. There's the bottom of our range. We're waiting for a breakout candle to occur outside of that range. And what have you had? Zip. You've tested the bottom of the range. You've tested the top of the range. And now this US 30 is in the dead center of that range. This strategy just kept you out of trouble. The market's not going to break, so we didn't get a trade. It's that simple. Now let's take a look at something that has broken. US 500. Here's your 15-minute trade right there. Opening 15, bang, bang. Where are you looking to sell? There was our range. Where'd you sell at? Sold right here. Okay. Look where we're at. Key level was our overnight low. We've already taken that out and tested it. In my view, it's a pretty darn good trade. Now, as far as our stop losses go, we have two options. That's why I love this strategy. It's dynamic. I have options. You need options. A trader needs options. If you don't have options, you're going to run into trouble eventually because you need to be able to fine-tune these things. I have two options with my stop loss. Number one, place it above the range. Now, if in fact that's going to be your approach, your opening ranges sometimes get pretty good sized. They do. You're going to have to dial your leverage down so you're not taking a huge risk playing that range. The other thing you can do and really skew things in your favor is put your stop out point right above your trigger bar, right above this one that actually got you into the market. Stop loss right above that, and you're playing a breakout. Which one do I like better? I think it's tough. I think the shorter the time frame you go, the smaller this range is going to be, so maybe just play the range. That definitely gives you the best chance for success. It does. But if you want to build those really hot, really attractive risk versus reward trades, 1 to 3s, 1 to 4s, 1 to 5s, then you want your stop loss to be as tight as it really can be. All right, so that's something to think about there as well. So this is pretty good stuff. I favor that. This 15-minute range, though, not bad right after that U.S. Open. So remember, U.S. Open, 9:30 a.m. Eastern. First two 15-minute bars, not bad. I like the 30-minute as well. I think probably the 30-minute's going to give you a higher success rate over time, but it's also going to involve a bigger risk. Now, if you wanted to take this down to a 5-minute chart, you certainly could. I mean, there really isn't any problem with that. We'll do a separate example. But right there's our trade. Now, these are demo dollars. No, full disclosure, these are demo dollars, but really an incredible trade. It went right down to our overnight low, which it made for a pretty good target. We were risking what? Our entry point was right there at 61.15, and you're up there at 61.28. So what do you got, about 13, something like that? 13 points. Yeah, we got it. Got a 1-to-1. And you can hold this as long as you want. Just remember, your key levels are key. Under redundancy, redundant. It's very important. So that's a good look at that trade. I'm partial to taking money off the board, so let's go ahead and ring the cash register and bring those demo dollars home and put them in the pile. Let's break this down right here for another, I would say, pair. It's not really a pair, but it's definitely a CFD that you could be looking to trade. US CFD right there on the open. US 100, E-mini NASDAQ futures, NASDAQ. This one's highly volatile. This thing is all over the place. The range bars, your ranges are big. Your 15-minute bars are big. Your 30-minute bars are big. That's absolutely imperative that you understand those bars on the NASDAQ are a lot bigger than the Dow 30 and the S&P 500. Does that mean we can take it down to a smaller time frame? I believe we can. Let's go ahead and take a look right here. 5-minute chart. I'm going to take this down to a 5-minute chart and show you what an opening range breakout an orb would look like on the 5-minute chart. Now you'll notice if you've seen the video, I use the 920 crossover as confirmation. You can do that as well. I want to keep this as easy as I possibly can for this workshop. We're going 2 bars, no confirmation, just playing the break. That's it. Right here, there's your opening bell, ding ding, 7:30 to 7:35, and then what do you have right there? You've got 7:35 to 7:40. So opening 10 minutes of trade. What happens? There's your buy, bang, you get stopped out. Now, if you played it tight, you did all right. You didn't lose very much. If you used the whole range, you lost on this one. So how would I have built my key levels? Would have been relatively straightforward for me to do. I would have been looking at the previous day's high. Definitely had to do that. Previous day's low. How about earlier in the week? Maybe weekly highs and weekly lows? Maybe that's important. Maybe it isn't. Right there, though, those are 2 very basic key levels. All right, let's go down to a 30-minute chart and see exactly where our overnight highs and lows were. Okay, this is fantastic stuff. Right there, we opened yesterday afternoon, traded above yesterday's high, rotated back down. We gave it another run right on the open, and then we got chopped. So the question is 5-minute, 15, 30. Well, I can show you right here what happened on the 30-minute chart. Opening bell, ding, ding. There's your first hour of trade. What happened? You won. you got on the right side of the market. Remember that the shorter the time frame, the choppier the price action, the less chance you have to win. But when you do win, you can definitely still make money trading something like a 5-minute chart. Love the 30, love the 15. This is just a failed auction above yesterday's high and then a big reversal. Let me ask you this. If this is your key level, right here, 21,905, the previous day's high, all right, is it attractive to go long up there? You know, it could be. It could be if we're trending. If we have a hot daily trend going, we're definitely bullish here for the US 100. It wouldn't have been a bad trade to take a shot to the long. What's the right way, though, thus far today? It looks like the short is. So if let's say you take this trade right there and you go ahead and you get your entry, something like that, you're in pretty good shape to the short. Your key level is going to be somewhere right down there, 21,702. Maybe you could shade that up a little bit. Where's your stop loss? Your stop loss is above the daily high. Now, there's a million different ways to trade this. We're sticking with the most basic. Could you wait for this range to set up and a pullback into this range and then sell, just betting that the top's in? Yeah, you can do things like that. Just be consistent. We're probably going to make a bunch of videos if there's enough demand and you guys want to get into this opening range breakout stuff. I could tell you already off the top of my head, I could say, okay, 30-minute bar, bang, bang, there's my opening range. Okay, we've got our short side entry. What should I be looking to do? Well, you can see you got a swing low there. I love Fibonacci's. Spike high, spike low, pull back, golden zone 62% with this bearish breakout. Then I'm short, and if that's the case, I'm short from inside of my range as opposed to outside of it. Is that really a breakout trade? Not really, because the idea is that you're going to break out from the range, but it definitely could be a trend following trade. What I'm saying is the important part of the range, this opening range, is your stop out point. Establishing the range. Now, we don't know how far the market's going to move. No one knows that. If somebody knew that, and I watch YouTube all the time, and I see people that absolutely know how far the market's going to go, that's hogwash. There's nobody in this world knows how far a market's going to go. I recommend always being conservative with your profit targets. If you want to make more money, then you just leverage up on your entries. That's the way I look at it. Now, you can still hit the big winners, and this is one strategy that can help you do just that. Let me see. Liquidity grab. There you go. Nope. You guys are right. Let me see. T Marina. Hey, Shane, someday do you think you could shout out your total trading account balance? I could tell you right now, I never tell anybody how much money I'm trading with, ever. There's way too much of that out there in this industry. Way too much. Everybody's trading $1 million accounts. Everybody, I won't mention any names because I don't want to start fighting with people online, and I don't want to do it. But I see everybody that shows up to make these YouTube videos to show you how great they are. It's always 100,000, 250,000, 500,000, $1 million. I saw one on some guy that made like $3 million last year trading, and I go, God bless you, good for you. How much did you start with? Well, yeah, I started with $1 million. Okay. I am very, very conscious of counterparty risk. Brokers fail. Liquidity providers fail. When the big market crash comes, brokers go under just like everyone else. And when they go under, you have to stand in line to get your money back. It's not FDIC insured if you're in the United States. Your brokerage account is not FDIC insured. If, in fact, your broker goes under, then you have a situation where you've got to stand in line and sue and try to get your money back. Good luck with that. You'll get a fraction of it. Unless you're an institutional trader, the big money is going to get paid out first, because they have the money to really take people to task and sue them. As retail traders, we don't have that. And I mean by big money, $5 or $10 million, all right? And that's based. I mean, that's not very much money in this world anymore. It really isn't, and that's sad. I go in at $5,000 and $10,000 chunks, meaning I will not let the broker hold any more than $5,000 or $10,000 of my money unless we're going to make a big position trade. Then that's something different, and we'll talk about that another time. But for day trading purposes, the type of things that I'm showing you here, I let the broker hold $5,000 or $10,000. $5,000, it's not a bad place to begin. That gives me enough leverage to take the positions intraday that I need to take and generate the profits that I need to generate. Now, hey, that's small. That is a small amount of money. Most people sit around and say you can't do it with that. And I say, well, I'm not just trading with that. I have reserves. If we take a hit, then we deposit, we bring it back up to 5. If we get way ahead of 5, we take the paycheck, we take that, we put it in our bank account. In my bank account, my money is FDIC insured. That means that if somebody steals my money, I got a shot at getting it back. But in my brokerage, in my futures account, my Forex accounts, keep whatever you need in there. Just make sure that whatever you've got there, you can afford to lose in case something really bad happens. Now, that is where you've got to do your research on your brokers. You've got to do it. You'll notice with Switch, go to Trustpilot. Check out all the reviews there. Read other people's experiences. Your futures broker, do the same thing. Do the same thing. I sort of err on the side of trading with the bigger brokers, especially in futures, because I don't really need ultra low commissions the way that I trade. I don't make enough trades for that to matter too much. But I want to know that my money there's more money behind my money. And I never get overexposed putting money in the bank, putting money in a trading account. A lot of people fall in love with their trading account balance and watch it grow. I don't do that. I play for money, cash. That's what I want to do. So right there, opening range break. Okay, we've got 2 other examples to go over here, and then we're going to wrap this workshop up. Great question, though, Team Marina. That's what it is. There's no Bugattis here. I don't know no Bugatti. We own a Dodge Ram. We got a pickup truck and a car, and they're both paid for. How about that? Brian Barbie, unless you're Nancy Pelosi. Absolutely. Absolutely. All right, guys. I got some requests to talk about how to do this strategy on the Forex. If I was trading this on the Forex, I would be very cognizant of a couple of different things. Number one, always be aware of economic events, key economic events. Now, what I just showed you for U.S. equities is going to keep you away from that pretty much. You're not going to have that issue unless you got Trump talking in the middle of the session, or today we had some some S&P Global numbers out during the session. All right. Usually our key numbers here in the United States are going to drop about 8:30 a.m. Eastern. That's before the market open. So it really it's not going to mess you up too bad. But definitely understand when an NFP is, when a Fed meeting is. We got one of those coming up Wednesday. Things like CPI, those would be the big 3 that I would always be ready for those. Central bank announcements, CPI figures, NFP, jobs numbers. Those are huge. Now, this is one way that you could trade the opening range breakout for a Forex pair. Now, I'm looking right here. I've got it marked, the London Open. I've got a 30-minute chart up. Now, with Forex pairs, I wouldn't get too granular, meaning I wouldn't go too short. If you're interested in scalping using real tight time frames, use something like the Piranha, or maybe something that's going to get you in and out of the markets. Remember, your opening range breakout's only going to give you pretty much 1 trade a day. That's it. You've got an opening range, and then you got to make your trade. Well, right here would be our London Open. This developed last night. London Open's about 1 a.m. my time, so this would be the 30-minute bar before it. About 1 a.m. my time, so that's 8 Eastern, not 8 Eastern, somewhere in there. It's in this neighborhood. The way that you tell Okay, the way that you tell where you should be getting in, or at least judging an opening range, is you need to understand when the volume comes into the market. Typically, the volume will come into the market much bigger than it has right around an open. Now, you can go to a 4-hour chart, and you can do this right after the Forex electronic open. Take the first 8 hours and build your opening range that way. That may be the best way to do it. For me, I'm looking right here. I'm saying, okay, London Open, I want to be a 30-minute trader, 30-minute price bar right there. Bang, bang. What do you got? Well, let's go ahead and draw our little rectangle. There it is. That's our opening range. Okay, where was our entry? Right there. Stop loss, I had two options. Number one, I could go beneath the range. I like that option, especially for Forex. You're going to see a lot of chop here. And if you would have tightened it up and played this very, very tight, what would have happened? You probably would have got stopped right there. Those spreads, a lot of times those spreads do crazy things around your stop losses. That right there would have been big. Highly recommend if you're going to trade Forex and your range is legit, like meaning tight. Look how tight this range is, 41 to 38. Or excuse me, I always read these things wrong. 13 to 83, so 17 and 13 is 30. So that's a 30-pip range. All right. There's your entry right there. High is going to be at 24.29. That's your bid. Stop out's going to be down there at 23.79. Pretty good sized. And what are you? Well, you're off and rolling. You're off and rolling. So where would your key levels be for something like this? Well, be the same. You'd be looking for your opening, your previous day. Previous day's highs and lows, you can see right there. What do you got? Well, we sort of broke above those, didn't we? All right. How about a weekly high or a weekly low? How about a swing high or a swing low? If you're in fact, you get in on a big trend day. It's all in play, guys. The biggest thing you have to do is design where exactly your stop loss is going to be and what exactly you want to get out of it. So right here, you'll see on a weekly chart, we broke above the weekly. What are we trending towards? This swing high right here. What is it? December's high? Not quite. That would be December's high. We've got our monthly high coming into range at 25.76. You guys pretty much all know what I'm going to be looking at. That's my favorite indicator right there in the world. So if I took that trade from 79, I probably should be aware there's going to be resistance up there at 126.10-ish or 09, 126. So then we reverse engineer this and we say, is the whole trade worth doing? Is it worth doing? If we're looking somewhere right in here, if that's our open, that's our opening range, and that's our entry, is it worth doing? Is there enough room from 124.29 up to 126? Oh, yeah, there's plenty of room. Build these things in your mind. Be dynamic. Ebb and flow with the market. Let me see. Linda Alvey, where do you live? Dillon, Montana. Don't come and shoot me. Just kidding. No, I live in Dillon, Montana. I live out in the sticks. It's very cold here right now. We're in the dead of winter. Fantastic little town, though. I really like it. There's a lot of good folks here. Agricultural community. My wife and I moved here. We lived in the city. We lived in Salt Lake City for 2 years. We're from Montana, though. We moved back to Montana because we wanted to be in a rural environment and live in a small town. And the beauty of day trading and working in the markets is you can do it from anywhere. I got nice fast internet, so we're good. Same as trading at Canary Wharf in London. Been there. That's a nice place. All right, here's a quick pro tip. If you're going to trade WTI crude oil with this opening range breakout strategy, what do you want to do? When do you want to start? That's the number one, guys. The number one question is, when do you actually start? Me? I'm real big on 9 a.m. Eastern, about a half hour before the U.S. Open. You will consistently see a flood. You'll consistently see a flood of volume there. Bang, 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 bang. Those are the old NYMEX pit hours. So what happened here? Nothing really. 15-minute chart. You can get away with this on crude oil. So right there is going to be your range. Boom, boom. Head fake. This would be, let me see, I saw somebody say a liquidity grab. Yeah, right there. Henrik's right. That would have been a liquidity grab. What happens in these markets over and over and over again? You see the market run, wipes everybody out. I've had not fist fights, but huge discussions with people. I mean, stop hunting doesn't exist. They don't stop hunt you. Yeah, they do. That liquidity grab, we made a video on that not too long ago. This happens more times than not. If you're in the futures markets, I see this every single day. What do you got right there? Well, you got sort of an overnight high. Well, what do you got there? All right, nice test of that zone inside. What happens? We break above the overnight high. Instead of turning into a range, turning into a trend day up above that high, what happens? Reversal. It's called a failed auction. There was no bidders there. There was no bidders there to drive the market. So what happened? It spun. Well, when it spun, what do you get? Bang, bang. So what do you got? You broke down the bottom of your range. Something like that would have been your sell. Is this a good trade? Well, I don't know yet. Let's have a look. So if we sold down here, number one, we didn't make much money. Now it's drawn against us. Where were our key levels at? If you're going to trade crude oil, you need to know these levels, definitely. Your overnight high, okay, we already tested that and failed. Where was our overnight low? Right there. It would have occurred yesterday evening after the electronic open. Remember, the markets close and they reopen every day. That would have been your low. Okay? Bang, bang. That would be your tentative profit target. Do we like this? That's not good. That's a big sweep. That's a big sweep. Would that trade be worth taking? If I'm going to take it, essentially I'm betting that it's a trend day down. That's a tough bet. We don't have any prima facie evidence that it's going to be a trend day today. Matter of fact, it's a rotational day. So if we're looking for something like this as a target, is entering right here, selling 74.41s, looking for 73.98. So we're looking for 40 pips, but where does my stop loss have to be? It's got to be at least right up in here, probably above the failed auction. Where's your stop at? 75.21. I'm selling 74, so all of a sudden I'm risking 80 to win 40, 42, and that's just a 1-to-1. That's not good enough. You can't risk 80 to win 40 and expect to get away with it. This inevitably will happen. Now the question does become, maybe we rotate around. Do we sell this range again? Personally, I don't think so. I think the breakout failed and you're going to rotate and close somewhere up in here. But that, you're going to have to sort of figure that stuff out for yourself and figure out how you want to execute. We will be talking more about how to make these strategies better. I'm not necessarily a believer that you take the initial entry, but you can. Just be consistent with it. Last thing we're going to look at here is this. Give me a 5-minute. Give me a 5-minute crude oil chart. Did we catch this big break right here? Where are we at? 7 a.m., 9 a.m. Eastern. Highly recommend starting there. You don't have to, though. You can do your own research and see. Right there. There's your 2 bars. That would be your range. What'd you get? Well, you got a head fake to the top side. There's your liquidity grab. What do you got right there? There's your sell. Does it make any money? Is it a bad play? I don't know. Could have sold right there. Stop out. Let's say you're playing tight. If you're playing tight, you made money. If you're going to let this thing go against you, then you're on the hook for a bundle. It's a challenge. Just remember, whatever you do, be consistent. Understand that back testing is going to be needed. Test some different time frames. Test some different markets. See what you can do. All right, everybody. I think I'm going to go ahead and sign off here for a few hours. We'll be back for sure. Let me see. Linda, nope. Almost neighbors. South Dakota. All right. So you're over in the oil fields then. Are you near there? I did a little time over there in the oil fields up in Williston, North Dakota. I'm trying to think of the big South Dakota State. I mean, they're our rivals in football. They're pretty good, Jackrabbits. I'm trying to think about where the oil fields are in South Dakota. I can't remember off the top of my head for some reason. But you live down the street from me. Yep, the national park. There you go, Brian. When it hits the fan, that's kind of what we were thinking, just in case the crime got out of control. I didn't particularly want to be in Salt Lake City where we were, that's for sure. All right, that's a wrap for now. Thanks for tuning into the workshop, guys. If you have any questions at all on this strategy, be sure to reach out and ask me. We're going to have a lot of streams next week. We're starting with the 920 EMA crossover. We're going to be trading that live for you on Monday. We've also put out that video, so if you haven't seen the video, the new one on our How to Trade Calm YouTube channel, check that one out. And then also we're going to have FOMC Live. That's a big deal. We always love critiquing Jay Powell in his monetary policy moves. We're going to have 2 streams for you. for you on Wednesday. We're also going to do a 10-minute trading blitz. That's going to be inside the trading room at howtotrade.com or over on Forex Signals TV on YouTube. So be sure to check those out. We're going to scalp some Fibonacci's on Fed Day. Should be a lot of fun. All right, everybody, I want to thank you for joining me. Have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.